Hey guys, I wanted to make a somewhat short video on a couple things with Bitcoin. I wanted to talk about how we could have bottomed and kind of where we're at on the macro scale, and then I can drop down into the lower time frames and show how we could have spotted the bottom and taken a trade off of that, and then how we can play it going forward. So the first thing is looking at the monthly chart here. We have a 21-month EMA on here is what I'm looking at. It's kind of support and resistance levels throughout the history of Bitcoin when it trends. So in bull runs, it'll continue to hold that until it breaks down below, and then you're in a bear market, and then it holds support again. You can see where we broke below, and we really chopped it up in the last bear market. But right now we're holding. We almost wicked down to it on this first sell-off, and then the second one we've wicked below it and then held on that monthly close and started to react. And so that's a good sign. Just looking at it from a momentum perspective, and these EMAs will help you to decide if you're still in a trend or not, or if you're losing steam. And so to me, that looks good. And then I'm also looking at this, from an Elliott Wave perspective. And most every Elliott Wave guy is going to be looking at it like this, where, this is a 1-2. And I've been looking for the 3-4 for a while now. I didn't think that the 4 was done once we had this correction back, a couple months ago, mainly because it was just too short in time. You see how the 2 took a while, like this 4 just looked like it played out too quickly. There just wasn't enough structure for it to look like that the 4 was complete, and that's why, I was always kind of expecting there to be, some kind of triangle or something like this, which it doesn't look like we're going to get that now because of the way the structure's playing out. It's looking more like a running flat, uh, a running flat correction, which is, it's kind of like in a parallel channel type correction like that, where it makes 3 waves, where you have a first wave down, and then you make a B wave that makes a higher high than the previous all-time high. Then you have a C wave that makes a higher low than the A. And so that's what a lot of people were looking at, and that's what I think has potentially played out here. And if that's the case, then we'll be starting our 5th wave. And this monthly candle right now looks pretty good. I would say if this monthly was to, by the end of February, if this is to close back above this previous red month in January, then we would be looking really, really good for this 5th wave to play out. Just looking at it from an Elliott Wave perspective, it looks like it makes a lot of sense to me. And I know a lot of on-chain analysts have a lot to support the fact that we're still in a bull run as well. I don't really follow that as much, but I do keep track of, what some of those top guys are thinking as well. And it seems like there's some confluence there with the fact that we should still be in a bull run, and Elliott Wave's, not giving me any signs at all that we're in a bear market, that we're still in a macro bull trend, and we're just waiting to put in our 5th wave. So I'll go down to a little bit lower time frame, and so now I'm on the weekly, so you can see the 21-week EMA, which held really, really strong in 2017 bull run. It was resistance in the bear market, got chopped up in this, but it's become support here. Broke back down below. We're just chopping it up, basically like we did right here in this consolidation. We're chopping up that 21-week EMA. But eventually, I want to see us get back above it, right here, and hold as support, kind of like what we did right here. Because if we're coming out of the tail end of this correction, we should flip it to support again and start doing something like that to start trending up again. So I'd be looking for that. We're going to have to get up above like almost 50K, probably 48K to hold above that 21-week EMA and kind of develop that as support to start trending again. But I'm going to take it off for now because it kind of gets in the way of the Elliott Wave count. So that's what we're looking at with the 1, 2, 3, 4. So we got the ABC running flat on there. I'll show you a couple things like with this 1, 2 when we were projecting for the 3. I had done this quite a bit back when I was doing videos. You can put this on, make sure it's on log scale, and put the 1618 on there and the 175. And I like to put the the 2618 as well. So when I'm doing this fib based trend extension, when I project from the 1 and the 2, I can look and see where the 3 could have likely gotten resistance. And so the high probability zone was always right here. Um, anybody that was following Elliott Wave, when they looked at this as a 1-2, if they got in anywhere in this zone, I mean, they would have really been looking to take profit and up here in this area. And so we reached that, we wicked to it right here, reacted, and we've got consolidation all around this zone. And so honestly, the next zone I'm looking at from a fib extension standpoint is this 2618 for this fifth wave. And so that's one area of interest up here on the chart that I'll just mark, that I'll keep an eye on for a fifth wave. And so, looking at this as a third wave, not exactly how this subdivided, not sure how it's subdivided, if that was like a 1-2 running flat, and then you had a 3-4-5, and it kind of finished like that. Change it to a different color. So it could have looked something like that. I'm not exactly sure, but as long as we've went sideways now, this is obvious that it's correcting this whole leg up from the COVID crash. So I don't really care at this point what the subdivision is in here. I don't get into the details too much when I'm doing Elliott Wave. I don't think it's really important. I've noticed a lot of people that trade Elliott Wave and try to get too much into the sub counts tend to make a lot of mistakes, and just from experience, it never serves me well to go in and get the exact count on every sub wave. It's better just to know the overall structure, and the overall structure to me is an impulse, 3-wave correction, impulse, 3-wave correction, and now we should get another impulse, and that's what I'm looking for. And looking at this correction right now, it looks like the end of the correction for the 4-wave, correcting this whole third wave up. And so some ways to determine if this is a running flat and it could be completed is you use a fib extension. You start at where the beginning of the correction started, which was the all-time high at this point. You come down to the low of the A, and then you project from the high of the B right here. Put it right on there, and then you'll have to put the take these off. Put the 1-to-1 and the 1-2-3-6 on there. Where's the 1-2-3-6? And you get a range, and make sure that it's take it off log, put it on linear, and you can see on the linear that we hit the 1-to-1 exactly, and that's what a lot of the Elliott Wave guys were looking at, is that we would hit this 1-to-1 to finish this running flat. And currently, I mean, it literally wicked off of it. So that is a good sign technically, especially if you're looking at it from this Elliott Wave perspective, because that should signal that it's likely that this running flat is done. And so we've had a strong reaction. We're forming 3 weekly candles that look pretty strong right now. So what we want to see is a higher low formed, coming out of this, because all this really is the first impulse. So this would be like the first impulse up of the potential, next run that we have here. It goes all the way up like that, and then we, end up starting a bear market. So we want to see higher lows forming, but right now this looks very strong coming out of this running flat correction, and the ingredients are definitely there for the bottom to be in at this point. So I'm going to get rid of that and then go down to a little lower time frame again. And so one way that we could have, there are a couple different ways that we could have determined that this was the low right here. I was not very confident that this was the low. Like I just didn't get in anything right here. And that's not you don't have to try to knife catch the bottom. Normally the best thing to do is wait for that reaction and then get the first pullback, which we did get, and I'll show that right here, how there were at least 2 entries right here that you could have had before we had this follow through. So you didn't have to actually try to catch the exact bottom on this because it was a little unclear how far this would go. It really depended on the stock market because, the indices were dropping pretty hard, and you didn't know when they were going to get support. So it would have been gambling trying to catch the low exactly. It's better to wait for the reaction up and then get in on that pullback before it, has its next leg up. But the first way to know that we were near a bottom was with that running flat extension that I was showing right here. So that 1-to-1, it hit that to the tick, and we reacted up. So that was the first thing that kind of made me think that okay, we got a strong reaction from there, so that could be a bottom, but that alone would be not enough. Going down to a lower time frame like the 4 hour, when we got this reaction up off of the low, which was that 1-to-1, we also had a bullish divergence down here as well. So the price was making lower lows, but the RSI was making higher lows in this zone right here. And so that was another sign that, if anything, it was going to be a local bottom and we would at least get some kind of follow through and consolidation. And so when you couple that, what I like to do when I'm down in these lower time frames and I see that we have this bullish divergence and it's telling me that we're temporarily at a bottom, then it gives you a little bit more clues when you're looking at the higher time frames. The fact that we hit that 1-to-1 extension and reacted as well, then you know that if we are going to have a relief, then what is that going to look like on the higher time frames? Because if it looks bullish on the higher time frames, that makes it even stronger for the lower time frames. And so once we got this relief and we were consolidating in this zone right here, um, if you look at that like on the weekly, what that looked like was this candle forming right here, which was, very strong weekly candle. So in that whole range that we're looking at here on this 4 hour, where we're just like chopping around right in here, it's forming a bullish weekly candle, which is kind of hard to ignore when you're looking at how long we were in a downtrend on the weekly without very many strong candles like that. We'd been in a downtrend for months where, you didn't really get any strong bullish weekly candles. I mean, some of these are somewhat indecisive when you look at the previous candle before it. Like this one could have been bullish, but um, it's not quite. It doesn't have the tail wick like we had on this one, where the tail wick is, uh, bigger than the body, and you saw where we had a strong reaction up, and so it paints a picture on the higher time frame while the lower time frame is forming its range, kind of giving you some clues on is it going to have follow through on that next weekly candle. And so that's what I was looking at when I was looking at this range forming right here, because not only do we hit the 1-to-1 extension, which we hit to the tick down here, we got this bullish divergence. So that told me that we're probably going to get a relief and we're going to consolidate. And since we're going to consolidate, it's going to make the weekly candle look good. And so I'm thinking about this as the week's progressing, and I'm like, okay, well, if the weekly candle is going to close strongly and look bullish like I was showing you, then it's much more likely that the next weekly is going to follow through, because you're going to have people that are trading off that weekly time frame, and they're going to see that and want to bid or get entries or even market in. So you're not going to get any bigger dips because you're going to have people bidding, expecting that next weekly to follow through, and which is what we got. And so one way to get in on these lower time frames would have been to what I always look for is that bullish divergence. You get the first reaction, and when you get that first reaction up, you buy the first pullback to the 0.5. And so that's probably the easiest entry that you can get when you're trying to time a bottom. So instead of trying to catch the exact bottom, like, that would have been very risky because you don't know that it would hold that 1-to-1 extension. You don't know that the S&P 500 and the NASDAQ wouldn't have just tanked a lot further and brought Bitcoin down below 30. You just wait for that reaction, and you get in. You get in when you get that first impulse back up off the lows. And so that was one way to get an entry. And so one thing I like to look for when you're just looking at it from a structure perspective, a lot of times reversals will look like this. They have a lower low in price, which I'd already showed that that formed a bull div, and then a reaction back up that flips this previous area into support. So when that pullback comes down, you see how it held this previous area right here as support. And so that, looking at it from a structure perspective, you could look at it like that without even looking at like the fib retracement. You would look at it like that. That's one structure that I really like to look for in a reversal off of a low. But looking at it from the fib perspective, take the fib retracement from the very bottom all the way up to the top wick of this first move off the lows, and you can see that the price came right to the 0.5 and 618 zone. So I'm usually, in this case, I'm usually bidding the 0.5 or right above the 0.5, and I'll have a stop down below the 707 in this case, and you're expecting follow through. And so if you were to get in right here, you have your little tool. You could target the highs right here, you know, with a stop below there. You get a 2.5 to 1 risk to reward, which is really good. But if you have the awareness of the higher time frame, like we're talking about with the weekly, then as this is forming, you know, you would probably be less inclined to take profit or take full profit when you know that the weekly is looking bullish while this price action is forming, and you would hold out and take some profit higher. So, you know, you always want to be looking at the higher time frame whenever you're entering on these lower time frame entries, because when you're catching these first pullbacks after what could be a bottom, you're going to sell yourself short a lot by taking profit too soon, because you're potentially catching a much larger reversal. And so it takes a combination of the higher time frame and lower time frame to realize that. But so that was one entry that you could have gotten right there. The other one was, you know, understanding that this is another potential running flat. So you had a sharp move down, a B and a C. So the way I look at this is we had this bullish divergence. We had a strong wave up. We flipped this area right here to support. So that's already telling me that, okay, we might continue higher. So what kind of corrections are we going to have where we're going to continue higher? And one of those is a running flat, where we had this first pullback, and then sorry, I had to cough. Let me get rid of this. So one of those is a running flat, where you have a sharp correction for the A, and then this is just very, very choppy, which is what you expect for a B. So the way these running flats play out is it's very sharp A, and then like a choppy B that just like makes all this mess going up, and then you have a sharp C. And that's like a characteristic running flat, and it kind of channels too. This B always kind of channels like this. And so that's a very obvious, you know, running flat, and that's what I shared in the Discord. And a lot of other Elliott guys I was following were looking for that as well. And so in that case, you would be looking for, you know, it to hold that low of that A right there. And so I was kind of expecting the C to come down to the 0.5 one more time, and we didn't quite get there. And so I had some orders out that just didn't get filled before this thing ripped. But that's essentially what I was looking for, because I knew that this weekly candle was still looking strong. So I was trying to get in anywhere I could, and I think a lot of people had the same idea, because they were looking at that weekly candle that was strong. You know, the one that I showed right here, this one. So that weekly candle was forming, and everybody was like, okay, that looks really good. You know, we should probably be bidding any kind of retracement. And so that's probably one reason why this didn't get down to the 0.5 before it took off. And so that was another entry which I didn't get filled, because I was wanting to go a little bit lower. But if you were looking at this from an Elliott Wave perspective with the fib extension, you could do the 1-to-1. So you come to the start of this sell-off, go down to the low of the A to the B right here, Okay, well, the 1-to-1 is at the 0.5 as well, so it didn't even reach the 1-to-1. So there's a lot of confluence right here that it just didn't reach, and a lot of times that will happen if a lot of people are looking at the same thing. And yeah, so the log scale and the linear scale are pretty much the same. So there was a confluence zone right there that, ideally it would have hit, but since there was so much bullishness on the higher time frames, people seeing that reversal candle likely completing, then it got support quicker and was able to take off. Okay, and so, what I'm looking at from here is there's a couple different options. This could be 1, 2, and then we're going in for a 3, 4, 5, and this is the first impulse off the lows. This could also be an ABC, meaning that when the C completes, we actually have to come back down again and make another low, which it's looking less likely when you look at the higher time frames because those candles look really nice. I mean, as long as we hold up this month, then it looks very good if it can hold up for the rest of this month. But there is a possibility that it can make lows, new lows. If the stock market is to tank again, it could drag Bitcoin down. But ideally, we look at this bullish scenario here where we have a 1-2, where that was a running flat, and we're coming out of this ideally in 5 waves, and this is some kind of 1-2. That might be a 3-4 and then a 5, and that completes this 3 right here. And then we have to put in some kind of 4. So I would be kind of looking for this area right here, that area to become support. So if we can continue to follow through right here, I'd like to see us come back down and this to hold as support for a 4 wave. That's essentially what I'm kind of looking for right now. This whole area back here, I just want it to be flipped as support. And so that's currently what I'm looking for. You can look at extensions from the 1-2 to see where the third could likely end. And you want to put the, go to the settings, and then you want to put the 1618, 175, 2618, keep the 1-to-1 on there as well. So the 1-to-1's already been reached, which if this was an ABC, you would kind of expect the 1-to-1 to probably hold if it was going to make new lows. But we've kind of went through that now, and so the area I'm looking for right now is right here for this third wave to end. So it looks something maybe like that, where we could overshoot it. We could get right in here. You can look back at prior levels of potential resistance right in there too, where price broke down. So this zone up here around like 46 to 47, somewhere in there, is where I would potentially expect resistance. Now that we've poked through what this resistance that we had, so I'm looking for potential resistance right in here, and then a pullback for the wave 4. Right there. And a wave 4 typically pulls back to the 382 of the third wave. So if we start from the beginning of the third and go all the way up to wherever let's just imagine this tops out up here. Put the 382 on there. I can take a lot of these off because I won't need them. The 382 is down here. You can also put the 236 on. So between like the 236 and the 382 is kind of where you would expect this wave 4 to go. The 382 might be a little low because we will, if we do make it up to here, we will have flipped this to support. So for it to come back down to the 382 might be unlikely. So we would just be looking for some kind of corrective move that gives us an idea that this is corrective and not like some kind of like steep reversal that looks like an impulse at the start of a new downtrend. And so we just have to let this play out and see how that forms. But, I like to look at things that channel really well. Like if this is going to channel down like this, it makes some kind of bull flag. We'll be able to notice that quite well in the market structure and then be able to make decisions on maybe getting in for this next leg for the 5th. And another thing that I look for too is like when this when this goes to form a potential fifth, like this looks like a 1-2. Obviously, if we make it up here and we do this correction takes this long to play out, it'll be pretty obvious that this is the 4 because it's the only other correction that's taken as long as the 2. And we would be looking for, in that case, uh, the RSI to probably do something like this. And then, when the fifth makes a higher high, the RSI is making a lower low. So you're basically just getting the opposite of what we got at the bottom down here, signaling that it was a reversal. We'll be getting a short-term top reversal up here at the top. So we would have higher lows or higher highs in price, but the RSI would be making lower highs. And that would signal that, probably should take some profits if you were to get in at a long right here. This is all hypothetical considering, sorry, my nose is stuffed up. Considering that this plays out, this is all hypothetical, that we get a pullback, it channels nicely, we were able to get a long somewhere like right here. Then we're looking for this bearish divergence to form where we could take some profits. And then in that case, we would be looking for the exact opposite of what we did down here. Bullish divergence, first big move, get the 0.5. All right, so bearish divergence, first big move down, get the 0.5 for the short, and then it comes back down. So you play it both ways, and you do it over and over again. But I'm always looking for these divergences to know when some kind of impulse is running out of steam. Just like we knew this impulse to the downside was running out of steam for at least a local bounce. So that's currently what I'm looking for right now, price action wise. And then ideally, if this is to do something like this, then we would, and it completed 5 waves, we would pull a fib from the whole 5-wave move that it completed, and we would be looking for a 0.5 pullback. I don't know that we'll get pullbacks that big if the high time frames continue to look bullish, because people are just going to keep bidding. It'll be the same reason why this got front ran right here and didn't pull back anymore, because a lot of people are going to be buying. So it might not be able to get down to this 0.5 again. But if it did, I would be expecting that we form some kind of structure like that and then continue higher. And you'd be looking for that 0.5 to hold, and you'd be getting the first major higher low on the higher time frame, because if you went out to like the daily, that's what this would look like. So, you can see market structure wise, that would kind of make sense if this is going to remain bullish and we're going to go make higher highs this year or make new all-time highs. So I hope this was helpful. So this is the first video I've made in a long time, but I figured it was time I could make one. If you got any questions about this video, and then just hit me up in the Discord. I'll see you guys next time.